Before we dive in, a quick but important disclaimer. I am not a licensed insurance agent, attorney, or financial advisor. This video is created for educational and informational purposes only. The world of insurance is complex and your personal situation is unique. Therefore, this presentation should not be considered legal, financial, or insurance advice. Please always consult with a qualified and licensed professional before making any decisions about your policy. There is a single choice you make on your Michigan auto insurance policy that could mean the difference between walking away from a serious accident with your life intact and walking away from it with a lifetime of debt that could bankrupt your entire family. And I'm willing to bet that more than half of the drivers in this state have no idea what that choice truly means, or which box they even checked. This isn't a scare tactic. It's the dangerous new reality of driving in the Great Lakes state. For decades, Michigan was known for two things when it came to car insurance: being the most expensive state in the entire country, and having the best, most comprehensive medical coverage in the world if you were in an accident. You paid a fortune, but if the worst happened, you were covered. For life. Then, in 2019, everything changed. A massive auto insurance reform was passed, promising one thing: lower rates. And for many, the rates did go down. But what wasn't advertised on the billboards and in the flashy commercials was the monumental risk that was shifted from the insurance companies directly onto your shoulders. The promise of choice became a minefield of potentially devastating financial decisions. That's why this video exists. This isn't just another boring explainer. This is your survival guide. Over the next several parts, we are going to pull back the curtain on the entire Michigan auto insurance system. We will demystify the jargon, expose the common traps, and build, piece by piece, a complete understanding of how to protect yourself and your family without getting ripped off. By the end of this series, you won't just be buying a policy. You'll be strategically building a shield of financial protection. You will know exactly what personal injury protection is and which level is right for you. You'll understand what bodily injury liability limits actually mean in the real world. You'll finally grasp the difference between mini-tort, limited property damage, and collision coverage. You will be in control. So, why is this so critically important right now? Because the old way of thinking about Michigan car insurance is officially dead. Before 2019, the system, while expensive, was relatively simple for the consumer from a medical standpoint. Everyone had unlimited, lifetime medical coverage through their auto policy if they were injured in a car accident. It was mandatory. Your auto insurance was your primary health insurance for car crash injuries. It covered everything: hospital stays, surgeries, rehabilitation, attendant care, home modifications, you name it. It was a robust, if costly, safety net. The 2019 reform blew that system to pieces. It introduced choice. And choice is the insurance industry's favorite word. It sounds great, right? Freedom. Lower premiums. But what it really means is that you, the driver, now have the choice to opt out of the very coverage that once made the system so protective. You can now choose lower levels of medical coverage, or in some specific cases, even opt out entirely. And here's the terrifying part. When you call for a quote, the primary goal is often to give you the lowest possible price to get your business. This often means defaulting to the lowest coverage options unless you know enough to ask for more. You might save $50 or $100 a month on your premium, feeling like you got a great deal without realizing you've exposed yourself to hundreds of thousands or even millions of dollars in potential medical bills if you're seriously injured. Think about it. A single bad accident can result in medical costs that easily soar into the 6 or 7 figures. If you've chosen a lower personal injury protection, or PIP limit of say $250,000, what happens when your medical bills hit $250,001? Who pays for the rest? The answer is you do. Your health insurance might cover some of it, but often with high deductibles, copays, and coverage limits of its own. And many health insurance plans specifically exclude or limit coverage for injuries sustained in auto accidents, expecting your auto policy to be the primary payer. This is the fine print people don't read until it's too late. This video series is your defense against that fine print. We're going to arm you with knowledge, which in this case is quite literally power. The power to ask the right questions, the power to understand the answers, and the power to confidently select a policy that balances affordability with ironclad protection. Here's how we're going to do it. First, we need to build a solid foundation. We're going to start by dissecting the absolute core of the Michigan system, the no-fault law itself. What does no-fault actually mean? It's one of the most misunderstood terms in all of insurance, and the 2019 reform added new layers of complexity to it. Understanding this concept is the essential first step. If you don't get this, nothing else will make sense. From there, we will tackle the single most important part of your policy: personal injury protection, or PIP. This is the medical coverage portion, and it's where the biggest and most dangerous choices are now made. We will break down every single option, from unlimited coverage down to the Medicare opt-out, and explain in plain English who is eligible for what, and what the risks and benefits of each choice are. Next, we'll move to the other side of the coin, your liability coverages. This is the insurance that protects you when you are at fault for an accident and injure someone else. We'll talk about bodily injury and property damage liability, and why the state minimum requirements are a financial trap that you should avoid at all costs. We'll explain what happens when you get sued and how to ensure your life savings, your home, and your future earnings are protected. Finally, we'll cover everything else that makes up a complete policy: collision, comprehensive, mini-tort, uninsured and underinsured motorist coverage, rental reimbursement, and all the other add-ons. We'll separate the must-haves from the nice-to-haves and the outright wastes of money. I'll give you a practical checklist you can take with you when you shop for quotes, so you can compare apples to apples and make an informed, confident decision. I've spent an incredible amount of time digging through the official state resources, consulting with industry insiders, and deciphering the complex legal language of these policies, all to translate it into something everyone can understand. I've seen firsthand how a good policy can be a literal lifesaver, and how a bad one, chosen out of ignorance, can lead to absolute ruin. My goal is to make sure you end up on the right side of that equation. So let's begin with that foundational pillar. The entire Michigan system is built on one principle: no fault. But what people think no fault means is almost always wrong. It does not mean that no one is ever at fault in an accident. Of course someone is. Fault is still determined by police and insurance companies to figure out who pays for vehicle repairs and to assign responsibility. So what is it? At its core, the principle of no-fault insurance is this: no matter who is at fault for an accident, your own car insurance company pays for your medical bills, up to your policy limit. Let me say that again because it's the most important sentence you'll hear today. In a no-fault state like Michigan, your own insurance pays for your medical expenses, regardless of who caused the crash. If someone runs a red light and T-bones your car, their insurance doesn't pay for your hospital stay. Yours does. If you slide on ice and hit a tree, your insurance pays for your medical care. This was designed to speed up the payment of medical claims and reduce the number of lawsuits clogging up the courts. Instead of having to sue the at-fault driver to get your medical bills paid, you just file a claim with your own company. It's faster and, in theory, more efficient. That's the no-fault part. It refers specifically to the medical benefits, the PIP coverage. But as we're about to see, when it comes to the damage to your car and the potential for being sued, fault matters more than ever. So let's put this to the test. Imagine a crisp, sunny afternoon in Ann Arbor. You're driving your Ford Explorer. Let's call you Alex. You come to a four-way stop, you do everything right. You stop, you look both ways, and you proceed through the intersection. Suddenly, out of nowhere, a Honda Civic blows through their stop sign and T-bones you directly in the driver's side door. The impact is violent. Airbags deploy, glass shatters, and your world is turned upside down. The driver of the Honda, we'll call him Ben, appears to be shaken but unhurt. You, Alex, are not so lucky. You've got a broken arm and a potential concussion. The ambulance arrives. You're rushed to the University of Michigan Hospital. Who pays for that ambulance ride? Who pays for the emergency room visit, the x-rays, the cast for your arm, the follow-up appointments with a neurologist? Under Michigan's no-fault law, the answer is simple. Your own auto insurance company pays. It doesn't matter that Ben was 100% at fault. It doesn't matter that he got a ticket from the police at the scene. When it comes to your medical bills, your own policy is your first and primary line of defense. This is the absolute core of the system. It's called Personal Injury Protection, or PIP. You'll hear that acronym 1,000 times. PIP is the safety net designed to catch you, and it covers a lot more than just the initial hospital bill. Let's say your injuries are serious. Your doctor says you can't work for 3 months while your arm heals and you recover from the concussion. PIP coverage can pay for a significant portion of your lost wages, up to 85% of what you would have earned, capped at a monthly maximum that adjusts each year. What if your injuries are even more severe? What if you need help at home? Maybe you can't cook, clean, or even get dressed by yourself for a while. PIP can cover what's called attendant care, paying for a family member or a professional to help you with your daily needs. It's designed to provide a comprehensive recovery package, from medical treatment to wage loss to in-home care, all paid for by your own insurer, quickly and without having to prove who was at fault in a lengthy court battle. For decades, this was the deal in Michigan, and it was unique. Every single driver was required to purchase unlimited lifetime PIP coverage. Think about that. If you were catastrophically injured in a car accident, your auto insurance would pay for all of your necessary medical care for the rest of your life. It was the most robust coverage in the entire country. It was also a major reason why our insurance premiums were consistently among the highest in the nation. But in 2019, everything changed. A massive reform was passed, and for the first time ever, Michigan drivers were given a choice. The mandate for unlimited lifetime coverage was gone. Now, when you buy or renew your policy, you have to make a decision about your PIP coverage level, and it is arguably the single most important financial decision you will make regarding your auto insurance. So what are your choices? Let's break them down because this is where the details are critical. First, you can still choose the legacy option, unlimited lifetime coverage. This works just like the old system. If you're hurt, your medical bills related to the accident are covered, period. For people who want the absolute maximum peace of mind, this is the gold standard. Your next option down is $500,000 in PIP coverage. This means your auto insurance will pay for the first $500,000 of your medical care. After that, you're on your own. Below that, there's a $250,000 option. Same concept, just a lower limit. Your policy covers the first $250,000 in medical bills. Now, there's a special version of this $250,000 option. You can choose this level with medical exclusions. This is for people who have a non-Medicare health insurance plan, like from your employer, that covers car accident injuries and has a deductible of less than about $6,800. If you qualify and choose this, you can exclude yourself, your spouse, or any resident relative from PIP medical coverage, provided they have that qualifying health insurance. Your health insurance would become primary for their injuries. This can save you a lot of money on your premium, but it comes with a huge catch we'll discuss in a moment. Next, for people enrolled in Medicaid, there's a $50,000 option. This is the lowest level of coverage available. And finally, there's the full opt-out. You can choose to have no PIP medical coverage at all, but only if you have Medicare Parts A and B. Your Medicare plan would then be your primary coverage for auto accident injuries. Okay, so you have these choices: unlimited $500,000, $250,000, $50,000, or maybe an opt-out. The lower you go, the cheaper your premium will be. And that's tempting, right? Why pay for unlimited coverage when you have great health insurance from work? Why not take the $250,000 with exclusions option and save hundreds, maybe thousands of dollars a year? This is where we circle back to our crash scene. And this is where fault suddenly becomes the most important thing in the world. Let's rewind. Ben ran the stop sign and hit you, Alex. Under the old system, it didn't matter how badly you were hurt. Your unlimited PIP had you covered for life. But now, let's say you chose the $250,000 PIP limit to save some money. And let's say your injuries are catastrophic. A traumatic brain injury, spinal cord damage. You blow through that $250,000 in the first few weeks of hospital care. Your total medical bills for lifetime care are projected to be $5 million. You have $4.75 million in medical bills that your auto insurance will not pay. So who does? Under the 2019 reforms, you can now sue the at-fault driver, Ben, for those excess medical costs. Remember that cliffhanger? How fault matters more than ever. This is why. The person who caused the crash is now on the hook for any medical bills that go beyond the injured person's PIP limit. Suddenly, Ben's decision to text and drive, or to speed through that stop sign, could lead to him being sued for millions of dollars. And your decision, Alex's decision, to lower your own PIP coverage is what opens the door to that lawsuit. This creates a terrifying two-sided risk. If you are the victim, Alex, you have to hope that Ben has enough assets or a big enough liability policy to cover your massive medical bills. What if he doesn't? What if he was driving with the state minimum liability coverage? You could win a multi-million-dollar judgment in court and never see a dime of it, leaving you personally responsible for your own astronomical medical debt. Your life is permanently altered, and you're financially ruined. Now flip the script. What if you're Ben? You made a mistake. Terrible split-second mistake. And because the person you hit, Alex, chose a lower PIP limit, you are now facing a lawsuit that could wipe out your entire life savings, your home, your retirement, everything. All because you were deemed at fault. This is the new reality of Michigan auto insurance. The choice you make on your PIP coverage isn't just about you anymore. It dictates your ability to recover financially after an accident, and it determines your exposure to being sued if you cause one. The simple act of checking a box on your insurance renewal form has profound consequences. Choosing a lower limit to save on premiums is a gamble. You're betting that you'll never be seriously injured, and you're betting that you'll never seriously injure someone else. And what about that option to use your health insurance? The one that seems so logical. Many health insurance policies have limitations. They might not cover certain types of long-term rehabilitation, residential care facilities, or extensive in-home attendant care, all of which are standard under PIP. Relying solely on your health insurance could leave massive, unexpected gaps in your recovery. So the million-dollar question, or in this case the multi-million-dollar question, is what level of PIP should you choose? It's a deeply personal decision that depends on your risk tolerance, your financial situation, and the quality of your other health coverage. But it's a decision that must be made with a full understanding of the stakes. We've covered the immense cost of healing the human body after a crash. But your body might be covered. But what about the thousands of dollars of twisted metal sitting on the side of the road? Who pays to fix or replace your car? That's where things get even more complicated, and it all comes down to a different set of choices on your policy, choices that most people don't fully understand until it's too late. This is the fundamental misunderstanding that costs Michigan drivers thousands of dollars. They believe that if someone else hits them, that other person's insurance will automatically pay for everything. But in Michigan, your personal injury protection covers your medical bills, and for your car, well, you are responsible for insuring your own vehicle against damage. It's a core principle of our no-fault system. So let's break down the two main types of coverage that protect your actual physical car. They're called collision and comprehensive. You might see them on your policy declarations page abbreviated as COL and COMP. These are not required by state law, but if you have a loan or a lease on your car, your lender will absolutely require you to have them. And frankly, unless you can afford to just go out and buy a new car with cash tomorrow, you're going to want them. Let's start with collision. The name is pretty self-explanatory. This covers damage to your car when you collide with something else. That could be another car, a guardrail, a telephone pole, a garage door you forgot was closed. You get the picture. If your car is moving and hits an object, that's a collision claim. And here's the part that blows people's minds. In Michigan, it doesn't matter who is at fault. Let me say that again because it's the most important thing you'll learn about this topic. For the damage to your own vehicle, it does not matter who is at fault. Imagine you're sitting at a red light, minding your own business, listening to the radio. Suddenly, bam, you get rear-ended by someone who was texting and driving. Their fault? 100%. In most other states, you'd file a claim with their insurance company, and their policy would pay to fix your car. Not in Michigan. In Michigan, you file a claim with your own insurance company, under your own collision coverage. Your insurance company pays the body shop to fix your car, minus your deductible. Feels completely backward, right? The other guy was at fault, but your insurance is paying? Yes, that's the system. The idea is that it's faster and less litigious. You don't have to wait for two insurance companies to fight over who's to blame. You just call your company and the process starts. Now you're probably thinking, wait a minute, I have to pay my deductible even when the accident was clearly not my fault. And the answer is, it depends. This is where Michigan gets really specific, and it's where you have a critical choice to make when you buy your policy. You see, there aren't just collision and no collision. There are three different types of collision coverage you can buy. They are limited collision, standard collision, and the most popular broad form collision. Let's start with limited collision. This is the cheapest option, and there's a reason for that. With limited collision, your insurance company will only pay for damages if you are determined to be 50% or less at fault for the accident. If you are more than 50% at fault, say you run a stop sign and hit someone, your limited collision coverage pays you absolutely nothing. Zero. You're on your own to fix or replace your car. It's a huge gamble. You're betting that you'll never ever cause an accident. For most people, the small savings aren't worth this massive risk. Next up is standard collision. This is the middle ground. With standard collision, your insurance company will pay for the damages to your car regardless of who is at fault. Whether you got rear-ended or you backed into a pole, you're covered. But here's the key. You always have to pay your deductible. If you have a $1,000 deductible, you will pay that first $1,000 of repairs no matter what. Even if the other driver was drunk, texting, and driving a stolen car, if you have standard collision, you are paying your deductible. This brings us to the third and most common choice in Michigan, broad form collision, sometimes just called broadened collision. It works just like standard collision in that it covers you regardless of fault. But it has one enormous benefit. If the accident is not your fault, meaning you are 50% or less responsible, the insurance company waives your deductible. You pay nothing out of pocket for the repairs. So in that scenario where you were rear-ended at a red light with broad form collision, your insurance company would pay the entire bill. You wouldn't pay a dime. If, however, the accident was your fault, you would then pay your deductible as normal. It's the best of both worlds, offering complete protection and a reward for being a safe driver. It costs a little more than standard collision, but for most people, the peace of mind is well worth it. So what about that deductible you had to pay, even if the other person was at fault? Is it just gone forever? Not necessarily. Michigan has another unique feature called the mini-tort. It's a small exception to the rule. Under this provision, you can recover a portion of your collision deductible from the at-fault driver's insurance company. The maximum amount you can recover is currently capped at $3,000. So if you have a $1,000 deductible, and you use standard collision for a not-at-fault accident, you can file a separate mini-tort claim against the other driver to get that $1,000 back. It's an extra step, but it's a way to be made whole. If you have broad form, you don't need to worry about this, because your company will have already waived your deductible. Okay, so that's collision. Covers you when you hit something. But what about all the other ways a car can be damaged? What if a deer runs out in front of you? What if your car is damaged in a hailstorm? What if a tree branch falls on it during a windstorm? Or what if you walk out of the grocery store to find your car has been stolen? None of those are collisions. For all of that, you need the other piece of the puzzle, comprehensive coverage. Think of comprehensive as other than collision coverage. It's for almost everything else. Fire, theft, vandalism, flooding, hitting an animal, glass breakage from a rock on the freeway. All of these are comprehensive claims. Just like collision, comprehensive coverage has a deductible, which is the amount you pay out of pocket before the insurance kicks in. You can choose a different deductible for comprehensive than you do for collision. And since comprehensive claims are generally seen as things outside of your control, you can't control the weather or the behavior of deer. They typically don't impact your rates as much as at-fault collision claims do. So when you're looking at your policy, you'll see these two coverages, collision and comprehensive, often listed together and referred to as full coverage. You'll have to make a few key decisions. For collision, will you take the risk with limited, play it safe with standard, or get the premium protection of broad form? For both collision and comprehensive, what deductible will you choose? A higher deductible, say $1,000 or $2,000, will lower your monthly premium, but it means you're on the hook for more money if you have a claim. A lower deductible, like $500 or $250, will make your premium higher, but your out-of-pocket costs will be much more manageable in an emergency. The key takeaway is this: protecting your vehicle from physical damage in Michigan is your responsibility. The choices you make on collision and comprehensive coverage will determine not if your car gets fixed, but how much financial pain you'll experience during the process. We've now covered how your medical bills get paid and how your car gets fixed. But we've been focused on you. What about everyone else? What happens when you are the one who makes the mistake? When you're the one who runs the red light and causes a devastating accident? Who pays for the other person's destroyed vehicle, their catastrophic injuries, their lost wages for the rest of their life? Your policy has to cover that, too, and the limits you choose here are arguably the most important financial decision you will ever make. This is where your entire financial life is on the line. We're talking about bodily injury and property damage liability. This isn't the coverage that fixes your car or pays your medical bills. This is the coverage that pays for the chaos and destruction you cause to other people. It's the part of your policy that stands between you and total financial ruin. Let's break it down. Bodily injury liability, or BI, pays for the medical bills, lost wages, and pain and suffering of people you injure in an at-fault accident. Property damage liability, or PD, pays for the stuff you break. The other person's car, a storefront, a city light pole, a guardrail, you name it. Now, Michigan law requires you to have this coverage. But here's the terrifying truth. The state-mandated minimums are a trap. They are a cruel joke designed to give you a false sense of security while leaving you catastrophically exposed. As of the 2020 reform, the default bodily injury limit is $250,000 per person and $500,000 per accident. But, and this is a huge but, the law allows you to choose lower limits. You can opt down to as little as $50,000 per person and $100,000 per accident. $50,000. Let that sink in. You might look at that and think, 50 grand is a lot of money. I'm a safe driver. I'll save a few bucks a month and go with the minimum. And in doing so, you have just lit the fuse on a bomb that could detonate your entire life. Let me paint you a picture. Meet Sarah. Sarah's 38. She's a great driver, never had an accident. She's a nurse, works hard, has a small house she's proud of, and about $80,000 saved up for retirement. To save $150 a year, she opts for the state minimum 50/100 liability limits. $50,000 for any one person she injures, $100,000 total for everyone in the accident. For property damage, she chooses the absolute minimum allowed, $10,000. $10,000. One rainy Tuesday, she's driving home from a long shift. She's tired. She glances down for just 2 seconds to change the podcast on her phone. 2 seconds. When she looks up, traffic has stopped. She slams on the brakes, but it's too late. She plows into the back of a brand new Audi Q7. The Audi is severely damaged. The repair bill comes in at $27,000. Sarah's policy has $10,000 for property damage. Her insurance company writes a check for $10,000 and sends a letter to Sarah that essentially says, "We fulfilled our obligation. The other $17,000? That's on you." Strike one. Sarah's emergency savings are gone before she even gets the first medical bill. But it gets so much worse. The driver of the Audi is a 45-year-old architect. The impact gave him a severe concussion and herniated 3 discs in his neck. He needs surgery. He's out of work for 6 months. His initial hospital bill for the emergency room visit and MRI is $30,000. The spinal surgery is another $75,000. Physical therapy adds $20,000 more. We're already at $125,000 in medical bills alone. Sarah's bodily injury limit is $50,000 per person. Her insurance company writes a check for 50 grand. And now the architect's attorney sends Sarah a letter. The remaining $75,000 in medical bills? That's on her. The $200,000 in lost wages from the architect being unable to work for 6 months? That's on her. And the claim for pain and suffering for the chronic pain he'll have for the rest of his life, which a jury could easily value at $500,000 or more. You guessed it. That's on Sarah. She is now personally on the hook for a lawsuit that will likely exceed $700,000. The lawsuit is filed. Her insurance company can't help her anymore. They paid her policy limit. She has to hire her own attorney. The court enters a judgment against her. They will put a lien on her house. They will garnish her wages for decades. They will seize her bank accounts. Her $80,000 retirement fund is wiped out in an instant. Her financial future, her hopes of retiring, her ability to live a normal life. All of it gone. Destroyed. Wiped off the map because she tried to save $13 a month on her car insurance. This isn't a scare tactic. This is reality. This happens every single day in courtrooms across Michigan and America. A simple momentary mistake. A glance at a phone. A sleepy morning. And a lifetime of work is erased. You cannot afford to play games with your liability limits. The state minimum is not a suggestion. It's a financial suicide pact. You have to think about the worst-case scenario. What's the most damage you could possibly do? You're driving a 2-ton steel cage at 60 miles per hour. The answer is a lot. You could hit a surgeon and destroy their hands. You could hit a minivan with a family of 5. You could cause a multi-car pileup. So what's the right answer? The absolute bare minimum any responsible adult should carry is the default. $250/500. $250,000 per person, $500,000 per accident. That should be your starting point. Non-negotiable. If you own a home, have any significant savings, or a decent income you want to protect, you need to go even higher. $500,000 per person, $1 million per accident. But that must cost a fortune, you're thinking. Doesn't. The price difference between state minimum garbage coverage and robust, life-saving protection is shockingly small. We're often talking about the price of a few cups of coffee a month. The reason is that small claims are common, so the first $50,000 of coverage is the most expensive. The big, catastrophic claims are rarer, so each additional $100,000 of coverage you buy gets progressively cheaper. It's the best bargain in the entire insurance industry. Now, for those of you who have something to protect, a house, a family, a future, there is another layer of protection. It's one of the best-kept secrets of the financially savvy. It's called a personal liability umbrella policy. Imagine your auto insurance liability limit is a bucket. Let's say it's a $500,000 bucket. If you cause an accident with $700,000 in damages, your bucket overflows. You are personally responsible for that extra $200,000. An umbrella policy is like a giant cistern that sits under that bucket, ready to catch any overflow. It's a separate policy that provides an extra $1 million, $2 million, or even $5 million of liability coverage, on top of what your auto and home insurance policies already provide. It kicks in right when you need it most, when your primary policy is exhausted. And here's the best part. It is incredibly cheap. A $1 million umbrella policy typically costs between $200 and $400 a year. For less than $1 a day, you can buy $1 million of peace of mind. You can make yourself virtually lawsuit-proof from a car accident. You can ensure that one bad moment on the road doesn't unravel a lifetime of hard work. If you have a net worth over $100,000, or if you just want to sleep soundly at night, you need to call your insurance agent and ask for an umbrella quote. It is the single most important piece of financial armor you can own. So let's review. Liability coverage isn't for you, it's for them. It protects your assets from the people you might accidentally harm. The state minimums are a trap that will lead you to financial ruin. The responsible choice starts at $250/500, and if you have anything to lose, you should have much more, plus a personal umbrella policy. This is not a place to be cheap. This is the foundation of your entire financial house. We've now built a fortress around your assets, protecting you from a devastating lawsuit. But what about your own car? In Sarah's story, after she caused that accident, her car was a mangled wreck. How does she get it fixed? How does she get back on the road to get to that job they're now garnishing her wages from? That's where the next part of your policy comes in, and it has its own set of critical choices and hidden traps. We're talking about collision and comprehensive coverage. These two coverages, often bundled together and mistakenly called full coverage, are what pay to repair or replace your car. They are completely optional under Michigan law. But if you have a car loan or a lease, your lender will absolutely require them. Why? Because the car isn't technically yours yet, it's theirs. And they want to protect their investment. Let's start with collision. This one is pretty straightforward. It pays for damage to your vehicle when you collide with another object, be it another car, a guardrail, a telephone pole, or even if you flip your vehicle. In our driver's case, she rear-ended someone. Her personal injury protection is handling her medical bills. Her property protection insurance is paying for the fence she hit, and her residual liability coverage is defending her against the lawsuit from the other driver. But her own car, the one she needs to get to work, is a crumpled mess. The body shop estimate is $9,000. Without collision coverage, she's paying that entire bill out of pocket. With it, she's only on the hook for her deductible. The deductible is the single most important part of collision and comprehensive. It's the amount of money you agree to pay first, before the insurance company pays a single dime. Deductibles typically range from $250 to $2,000 or more. Let's say our driver chose a $1,000 deductible. For her $9,000 repair, she pays the body shop the first $1,000, and her insurance company pays the remaining $8,000. Now here's the trade-off, and it's a constant theme in insurance. The lower your deductible, the higher your premium. The higher your deductible, the lower your premium. Choosing a high deductible of, say, $2,000 is a bet. You're betting against yourself. You're saying, I'm a safe driver. I probably won't get into an accident, so I'll save money on my premium now and risk having to pay a larger amount if something bad happens. Choosing a low deductible is the opposite. You're paying more in your premium for the peace of mind that if you do have a claim, your out-of-pocket expense will be minimal. There's no right answer. Only the answer that's right for your financial situation and your tolerance for risk. Can you comfortably write a check for $1,000 or $2,000 tomorrow without it derailing your finances? If not, a lower deductible might be worth the higher premium. But this is Michigan. It's never that simple. We have 3 different types of collision coverage you can buy, and choosing the wrong one can be a devastating financial mistake. They are called limited, standard, and broad form. Let's start with the one most people should avoid. Limited collision. The word limited should be a giant red flag. This coverage only pays for repairs if you are found to be less than 50% at fault for the accident. Let me repeat that. If you cause the accident, like our driver who rear-ended someone, limited collision pays you exactly zero. Nothing. You paid a premium for coverage that vanishes the moment you are at fault. It's the cheapest option, and agents or websites might push it to show you a super low quote, but the risk you're taking is enormous. For the vast majority of drivers, limited collision is a trap. Next is standard collision, sometimes called basic collision. This is the most common type. It works exactly like I described before. It doesn't matter who is at fault. Whether you caused the accident or you're the victim of a hit and run, you are responsible for paying your deductible. If you have a $1,000 deductible, you pay that $1,000, and the insurance company covers the rest of the repair costs. It's predictable and reliable. Finally, there's broad form collision or broadened collision. This is the premium top-tier option. It works like this. If you are more than 50% at fault for the accident, you pay your deductible, just like with standard collision. But, and this is the game changer, if you are not at fault, your deductible is waived. You pay nothing. Someone runs a red light and plows into you? With broad form, your car gets fixed and you don't pay a penny out of pocket. It costs more than standard collision, but it provides the highest level of protection and can save you $1,000 or more when you need it most. So to recap the Michigan options, limited is a high-risk gamble. Standard is the reliable middle ground. Broad form is the premium choice that rewards you for being a safe driver hit by someone else. Now let's talk about the other half of the equation. Comprehensive coverage. People often call it comp. This covers almost everything else that can damage your car that isn't a collision. Think of it as the acts of God and bad luck coverage. A deer runs out in front of you on a country road? That's a comprehensive claim. A hailstorm dents every panel on your roof and hood? Comprehensive. A tree branch falls on your car during a windstorm? Comprehensive. Your car is stolen from your driveway? Comprehensive. Vandalism, fire, flooding. It all falls under comprehensive. Just like collision, it has its own deductible that you choose. You might have a $1,000 deductible for collision, but a separate lower $500 deductible for comprehensive, because things like cracked windshields or deer hits are often more common and less severe than a major crash. Together, collision and comprehensive are what people mean when they say, "I have full coverage." But please burn that phrase from your vocabulary. Full coverage is a myth. It's a slang term, not an actual insurance product. It implies that everything is covered no matter what, and that is never true. There are always limits, exclusions, and deductibles. Using the correct terms, collision and comprehensive, forces you to think about what each one actually does and what choices you've made for your deductibles. This brings us to the most important question of all. Do you even need these coverages? If your car is paid off, the choice is entirely yours. And the decision comes down to one thing: the value of your car. Insurance is designed to protect you from a financial loss you can't handle yourself. The key is that insurance will only ever pay you the actual cash value, or ACV, of your vehicle. ACV is what your car was worth the second before the accident occurred. It's the sticker price minus depreciation for age, mileage, and condition. Let's imagine you have a 15-year-old sedan with 180,000 miles on it. It runs, but it's seen better days. Its actual cash value might only be $2,000. You're paying, let's say, $800 a year for collision and comprehensive with a $1,000 deductible. One day you get into an accident and the car is declared a total loss. The insurance company calculates the ACV at $2,000. They subtract your $1,000 deductible and write you a check for $1,000. You just paid $800 in premium to get a $1,000 check. Was it worth it? Probably not. You basically prepaid for most of your own loss. Here's a good rule of thumb. If the annual cost of your collision and comprehensive coverages is more than 10% of your car's value, you should seriously consider dropping them. You can look up your car's private party value on Kelley Blue Book or similar sites. If your car is worth $3,000 and your premium for these coverages is $400 a year, that's over 10%. You might be better off dropping the coverage, banking that $400 a year in a dedicated car repair fund, and accepting the risk yourself. It's a personal decision, but you should never pay for insurance that, in a best-case scenario, will barely give you back more than you paid in. Making these decisions, choosing your deductible, deciding between standard and broad form, and even determining if you need the coverage at all, puts you back in the driver's seat of your policy. But we're not done. Even with the best PIP, liability, collision, and comprehensive coverages, there are still gaps. What happens while your car is in the shop for 2 weeks after that deer hit? How are you getting to work? How are you taking your kids to school? Your policy as we've built it so far doesn't cover that. That $9,000 repair bill doesn't include the $500 cost of a rental car. And what about the tow truck that had to pull your car out of a ditch? That's another bill. These are the surprise expenses that nickel and dime people after a claim, and they're covered by a set of smaller, but incredibly useful, add-ons to your policy. Let's talk about these coverages because they are the unsung heroes of a great auto policy. Think of them as the safety net for your safety net. They're what separates a frustrating, expensive claims experience from a smooth, hassle-free one. First up is one of the most common and most valuable: emergency roadside service, also known as towing and labor. We've all been there, or we know someone who has. It's 10 o'clock at night, it's raining, and you're on the shoulder of the highway with a flat tire. Or maybe your battery dies in a crowded parking lot during the holiday shopping rush. Or even worse, you lock your keys in the car just as you're about to leave for a critical appointment. In that moment of panic, what do? You could start frantically searching on your phone for a local tow company, wondering if they're reputable, how long they'll take, and how much this emergency call is going to cost you. A simple tow can easily run you $100, $200 or more, especially after hours. A lockout service isn't cheap either. But with roadside service on your policy, you just open your insurance company's app, press a button, and help is on the way. It's that simple. This coverage typically handles towing to the nearest repair shop, changing a flat tire, jump-starting a dead battery, delivering a few gallons of gas if you run out, and even locksmith services. For what usually amounts to just a few dollars a month, you get 24/7 peace of mind. It's one of the best bang for your buck additions you can make to your policy. Don't leave home without it. Next, let's talk about a coverage that can save you from a massive logistical and financial headache: rental reimbursement. Imagine you get into a significant accident. It wasn't your fault, but your car is now undrivable. It's towed to a body shop, and the mechanic tells you it's going to be in the shop for 3 weeks. 3 weeks. How are you getting to work tomorrow? How are the kids getting to school? How are you getting groceries? Life doesn't stop just because your car does. You need transportation, and that means a rental car. So you call up a rental agency and find out the daily rate for a basic sedan is $40, $50, maybe even $60 a day, plus taxes and fees. For 3 weeks, you're looking at a bill of over $1,000, coming right out of your own pocket, all while you're still making your regular car payment on a vehicle you can't even drive. It's a nightmare. This is where rental reimbursement coverage becomes your absolute best friend. This add-on pays for a rental car while yours is being repaired due to a covered claim. It's usually sold with a per-day limit and a total maximum limit, for example, $40 per day, up to a maximum of $1,200. This means the policy will pay up to $40 each day for your rental, for a total of 30 days. My advice here is to be realistic. In today's market, finding a decent rental for under $40 or $50 a day can be tough. It's often worth paying a tiny bit more in premium to upgrade your limit to $50 or $60 a day. This ensures you can get a vehicle comparable to your own without having to pay the difference out of pocket. It transforms a major life disruption into a manageable inconvenience. Now let's move on to a coverage that is absolutely non-negotiable if you have a loan or a lease on your vehicle. It's called loan/lease payoff, but you probably know it by its more common name, gap insurance. This is one of the most misunderstood but critically important coverages you can have, and here's why. The moment you drive a new car off the dealer's lot, it depreciates. It loses value. After 1 year, your car might be worth 20% less than what you paid for it. This creates a dangerous financial gap. Let's say you buy a brand new SUV for $45,000. You make a small down payment and finance the rest. A year later, you get into a terrible accident and your beautiful SUV is declared a total loss. It's totaled. Your insurance company is going to pay you the actual cash value of the vehicle at the time of the accident. Because of that first-year depreciation, the actual cash value might only be $36,000. But here's the problem. You've been making payments for a year, but you still owe the bank $41,000 on your loan. So the insurance company sends you a check for $36,000. You forward that to the bank and the bank says, "Thank you. You still owe us $5,000. $5,000 for a car that no longer exists, a car that is sitting in a salvage yard." You are now forced to write a huge check to pay off a dead loan, and you still have to come up with a down payment for a new car. This is how people get into devastating cycles of debt after an accident. Gap insurance prevents this exact scenario. It is specifically designed to pay the difference, the gap, between the actual cash value of your vehicle and the amount you still owe on your loan or lease. In our example, it would have paid that $5,000, zeroing out your loan and allowing you to walk away clean, ready to start fresh. Who needs this? Anyone with a car loan or lease, but especially if you made a small down payment, financed for 60 months or longer, or rolled negative equity from a previous car into your current loan. If that's you, gap insurance isn't a luxury, it's an absolute necessity. And for those who want the ultimate level of protection for a brand new car, there's an even better option than gap, called new car replacement coverage. This is like gap insurance on steroids. If your new car is totaled, typically within the first 1 or 2 years of ownership and before it hits a certain mileage cap, this coverage doesn't just pay off your loan. It pays to replace your totaled car with a brand new one of the same make and model. So if your 1-year-old Ford Explorer is totaled, the insurance company will buy you a brand new Ford Explorer. It completely protects you from depreciation and ensures you get back exactly what you lost. It costs more than standard gap coverage, but for someone buying their dream car, that extra peace of mind can be priceless. So you see, these aren't just minor add-ons. Roadside assistance, rental reimbursement, and gap insurance are the critical components that make a policy whole. They are the practical, real-world solutions to the logistical nightmares that happen after a crash. They protect your time, your sanity, and your savings account. Building a policy isn't just about covering the big catastrophic costs of an accident. It's about making sure the entire recovery process, from the moment of impact to the day you're back on the road, is as seamless and stress-free as possible. Now, I know exactly what you're thinking. We've talked about Michigan's mandatory PIP coverage, bodily injury, property damage, collision, comprehensive, and now all of these smart essential add-ons. That list is getting long and it sounds expensive. And you're not wrong, it can be. But this is where we separate the average insurance buyer from the savvy consumer. Building the right policy is only half the battle. The other half is getting it for the right price. What if I told you there are powerful, often hidden discounts and strategies that most people don't know about, which can slash the price of this premium coverage by 10, 20, even 30% or more? People are leaving hundreds of dollars on the table every single year, simply because they don't know where to look. In the next part, we're going to find that money. Let's start by thinking like an insurance company. For them, every customer is a math problem, a risk calculation. Your premium is their answer to the question, how likely is this person to cost us money? Every discount we're about to uncover is simply you providing new information that changes the equation in your favor. It's not about asking for a favor. It's about correcting their math with facts. We'll break this down into 3 secret vaults of savings. The first vault is all about you, the driver. Most people know about the good student discount. If you or a driver on your policy is in high school or college and maintains a B average or better, that's an easy 10 to 15% discount right there. Why? Because the data shows that a student disciplined enough to get good grades is less likely to be a reckless driver. You're not just a student, you're a lower risk. But don't just wait for them to ask for a report card. You need to be proactive. At the start of every semester, send an updated transcript to your agent. Put a reminder in your phone. It's a 5-minute task that can save you a couple $100s a year. But what if you're long out of school? Ask about a defensive driving course discount. These are often state-approved courses. Sometimes you can even do them online in a single afternoon. You pay a small fee, say $25 or $30, to take the course. Then you send the certificate of completion to your insurance company, and they can knock 5 to 10% off your premium for up to 3 years. You do the math. A small one-time investment for a multi-year reward. You're literally paying a little to save a lot, and you become a safer driver in the process. Now for a big one that almost nobody thinks to ask about, professional affiliations and alumni associations. Are you a teacher? A nurse? An engineer? A first responder? A member of the military or a veteran? Hundreds of professions have associations that partner with insurance companies to offer group discounts. The same goes for college alumni groups. The University of Michigan Alumni Association, the Michigan State Alumni Association, they all have these partnerships. It's a hidden world of affinity group discounts. Pull up your insurer's website and search for affinity discounts. Or better yet, call your agent and ask directly. What professional or alumni group discounts are available? This one discount alone can be worth 10, 15, even 20%. It's free money for a job you already have or a school you already graduated from. The second vault of savings is your CAR. The machine itself. Insurance companies have a massive database of every make and model of car. They know which ones are expensive to repair, which ones have high theft rates, and which ones are built like tanks. While you can't change the car you have, you can make sure you're getting credit for all its safety features. Does your car have anti-lock brakes? Most cars made in the last 15 years do. That's a discount. Does it have daytime running lights? That's a discount. Does it have airbags, not just front but side impact and curtain airbags? Every single one is a potential discount. The problem is, sometimes their system only registers the standard features. You need to be the one to tell them about the specifics. Read your car's original window sticker or manual. If you have advanced safety features like electronic stability control, lane departure warnings, or blind spot detection, call your agent and list them out. Don't assume they know. Then there's anti-theft. If your car has a passive alarm system that arms itself automatically when you lock the doors, that's a discount. If it has a vehicle recovery system like LoJack or OnStar, that's an even bigger discount. Why? Because if your car is stolen, the insurer is on the hook for its full value. A system that helps get the car back dramatically reduces their potential loss, so they reward you for it. Again, they might not know you have it unless you tell them. And here's a modern one: the low mileage discount. With so many people working from home or having shorter commutes, we're driving less than ever. Most standard policies assume you drive about 12,000 miles a year. If you drive significantly less, say 7,500 miles or under, you're a much lower risk. You're simply on the road less, so your chances of getting into an accident are lower. Report your odometer reading to your insurer. Some companies even have pay-per-mile programs. If you're a low-mileage driver, you should have a low-mileage premium. It's that simple. Now for the third and final vault, and this one is about strategy. It's about how you manage your policy. The most well-known discount in this category is bundling. Combining your auto insurance with your home, renters, or even life insurance policy. Insurers love this. It increases customer loyalty and makes you less likely to shop around. And for that loyalty, they give you a massive discount, often between 10 and 25% on both policies. It's the single biggest discount most people can get. If your home and auto are with different companies, you are almost certainly overpaying. Next, think about how you pay. Do you pay your premium monthly? If so, you're likely paying extra service fees with each payment. Ask about a paid-in-full discount. If you can afford to pay your entire 6-month or 1-year premium upfront, most companies will give you a significant discount. They get their money guaranteed, and you avoid those pesky installment fees. It can save you 5 to 10% right off the top. While you're at it, go paperless. Sign up for electronic billing and automatic payments from your bank account or credit card. It saves the company printing and postage costs, and it ensures you never miss a payment, which makes you a more reliable customer. For this, they'll usually knock another few percentage points off your bill. It's a tiny change that adds up. Think about it. A paid-in-full discount plus an auto-pay discount plus a paperless discount could easily stack up to a 15% reduction. That's huge. Finally, don't be afraid to use loyalty as a bargaining chip, but don't give it away for free. If you've been with the same company for 3, 5, or 10 years with no accidents, you are a dream customer. Call them and tell them that. Say, "I've been a loyal customer for X years, my renewal is coming up, and I'm shopping around to make sure I'm getting the best rate. Is there a loyalty discount or any other offers you can apply to keep my business?" The person on the other end of the phone often has discretionary power to apply discounts to retain good customers. You won't get it if you don't ask. So let's recap the treasure map. We've looked in the vault of you. Good student, defensive driving, and professional affiliations. We've opened the vault of your CAR. Safety features, anti-theft, and low mileage. And we've cracked the vault of your policy. Bundling, paying in full, going paperless, and leveraging loyalty. By now, your head is probably spinning with all the potential savings. You're ready to call your agent and start slashing that premium. And you absolutely should. But getting the perfect policy with every possible discount is only half the battle. It's the peacetime strategy. What happens when a crisis hits? When you hear the crunch of metal and the shatter of glass? What happens when you actually have to use this thing you've spent so much money on? The claims process is an entirely different war, with its own rules, its own language, and its own traps. Making one wrong move, saying one wrong thing to an adjuster, or missing one single deadline can turn your perfect policy into a worthless piece of paper. It can be the difference between a quick, fair payout and a months-long nightmare that costs you thousands out of pocket. Next, we're going to arm you for that fight. We're going to walk you through the claims process step by step, so you know exactly what to do and, more importantly, what not to do when disaster strikes. The screech of tires, the crunch of metal. Your heart is pounding in your chest. In that disorienting moment, what you do in the next 60 minutes can define the next 60 weeks of your life. The battle has begun, and your opponent, believe it or not, is a system designed to be confusing. So let's get you ready. First things first, your safety. Before you even think about insurance, are you okay? Are your passengers okay? If there's any doubt, any pain, any dizziness, you do not move. You call 911 immediately. Your health is the #1 priority, period. If you are able, and it is safe to do so, move your vehicle out of the flow of traffic. Turn on your hazard lights. Your goal right now is to prevent a bad situation from getting worse. Now the evidence phase begins. Your smartphone is your single most important tool. You are now a crime scene investigator. Take pictures of everything. And I mean everything. The position of the cars. The damage to both vehicles from multiple angles, close-ups and wide shots. Skid marks on the road. Debris. Street signs, traffic lights, weather conditions. Even take a picture of the other driver, their license plate, their driver's license, and their insurance card. You cannot have too much evidence. Get the names and phone numbers of any witnesses. These people have no stake in the outcome and can be your most credible allies later on. When the police arrive, be cooperative, be factual, but be careful. State only what you know for a fact. Don't guess, don't speculate, and never ever admit fault. Not to the other driver, not to the witnesses, and not to the police. You can say, the other car came into my lane, but don't say, I'm so sorry, I should have seen him. That one little phrase can be twisted and used against you to deny your entire claim. Get the police report number before the officer leaves the scene. This report is a cornerstone of your claim. Okay, the scene is secure. You're home. The adrenaline is wearing off, and the soreness is starting to set in. Who do you call? This is a critical decision. You are going to call your own insurance company to open a claim. Why? Because under Michigan's no-fault law, your own personal injury protection, or PIP, coverage is your first line of defense for medical bills and lost wages, regardless of who was at fault. You need to get that process started immediately. When you make that call, you will be assigned a claims adjuster. It is vital you understand the adjuster's role. They might be friendly, they might sound empathetic, but their job is not to be your friend. Their job is to protect their company's financial interests and close your claim for the lowest possible amount. They are trained negotiators looking for any reason to devalue or deny your claim. You'll be asked to give a recorded statement. This is a minefield. You are not legally obligated to provide a recorded statement to the other driver's insurance company. For your own company, it might be required by your policy, but you can and should control the circumstances. Tell them you're not ready. Tell them you need to gather your thoughts. Never give a statement when you're flustered, in pain, or on medication. When you do give the statement, stick to the facts you documented at the scene. Keep your answers short and direct. If you don't know the answer, say, I don't know. Don't guess. The adjuster will ask, how are you feeling? This is a trap. The correct answer is never, I'm fine. Adrenaline can mask serious injuries for hours or even days. The correct answer is, I'm seeking medical attention. Or, I'm pretty shaken up and I'm going to see a doctor. Saying I'm fine can be used to argue that any injuries you discover later weren't caused by the accident. Soon after, you'll be hit with a paperwork tsunami. You need to become a master organizer. Get a binder. Create a folder on your computer. You will have a police report, medical bills, explanation of benefits, repair estimates, and correspondence from the insurance company. Document every single phone call. Note the date, the time, the name of the person you spoke with, and a summary of the conversation. This documentation is your armor. It proves you've been diligent and creates a timeline that can be invaluable if a dispute arises. Let's talk about the two main parts of your claim: your body and your car. For your injuries, you'll be filing a PIP claim. Your insurance company should send you a document called an application for no-fault benefits. Fill this out immediately and accurately. This officially opens the door to your medical benefits. This is what covers your hospital bills, your physical therapy, your prescriptions. But it covers so much more that people leave on the table. Did you know it can cover wage loss if your doctor says you can't work? It can cover replacement services. That's money to pay for things you can no longer do yourself, like mowing the lawn, cleaning the house, or childcare. It can even cover attendant care, where a family member or a professional is paid to help you with personal needs like bathing or dressing if your injuries are severe. These are benefits you paid for in your premiums. Do not be shy about claiming them. Keep meticulous records of all your doctor's visits and submit every single bill to your auto insurer promptly. Now for your car. This is the property damage part of the claim. If the other driver was at fault, their insurance is on the hook for your repairs under Michigan's mini-tort law, but only up to $3,000. Anything beyond that, or if you were at fault, falls under your own collision coverage if you have it. The insurance company will want you to use one of their preferred repair shops. You do not have to. You have the right to take your car to any licensed repair facility you trust. Get your own independent estimate. The insurer's estimate might be low using cheaper aftermarket parts. Insist on original equipment manufacturer or OEM parts, especially for newer vehicles. If they declare your car a total loss, it means the cost to repair it exceeds a certain percentage of its value. They will offer you a settlement based on the car's actual cash value. Do not just accept the first number they give you. Do your own research. Use sites like Kelley Blue Book, NADA, and look at local listings for comparable vehicles. You can and should negotiate this figure. You're not trying to get rich, you're trying to be made whole. Throughout this entire process, you must be the squeaky wheel. Be polite, but be persistent. Follow up with your adjuster regularly. Ask for updates. Send emails to create a paper trail of your inquiries. Claims can drag on, and sometimes the only way to keep yours at the top of the pile is to stay on top of them. You've done everything right. You've gathered evidence, you've been careful with your words, you've submitted your paperwork. You've played by the rules. But what happens when the insurance company doesn't? What happens when they delay, when they deny a legitimate medical treatment, or when they offer you a settlement for your totaled car that wouldn't even buy you a bicycle? That's when the game changes. That's when you need to know how to fight back. And when it's time to call in a professional. And that's exactly what we're covering next. So the adjuster calls. They're polite, they're professional, and they hit you with a number for your totaled car that is frankly an insult. It's the moment your stomach drops. You've paid your premiums on time for years, and this is the thanks you get? Before you get angry, get strategic. Understand this. The insurance company's first offer is almost never their best offer. It's a starting point in a negotiation you didn't even know you were in. Their job is to close your claim for the lowest amount possible, while still following the law. Your job is to make sure that amount is fair. Your first step isn't to yell or threaten. It's to build a case. You need to become an expert on one thing, the actual cash value or ACV of your vehicle the second before it was hit. This isn't what you paid for it. It's not what you owe on it. It's what a willing buyer would have paid a willing seller for it in your local market. Your mission is to prove that value is higher than their offer. Start by gathering your evidence. Did you just put on a brand new set of Michelin tires 2 months ago? Find the receipt. Did you have a high-end sound system installed? Find the receipt. Did you keep meticulous maintenance records showing every oil change and tune-up? Print them out. These documents prove your car was in better than average condition. Next, you go hunting for comparables or comps. This is the most important part. You need to find at least 3 to 5 examples of cars just like yours recently for sale or sold in your geographic area. We're talking same year, make, model, and trim level. They need to have similar mileage within about 10%. Go to sites like AutoTrader, Cars.com, and even Facebook Marketplace. Don't just look at the asking price. That's just a wish. If you can, find the actual sale prices. Sometimes dealer websites will list a car as sold, with the price still visible. Save screenshots. Print the listings. Create a folder. You are building a portfolio that demonstrates the true market value of what you lost. Pay close attention to the comps the insurance company used to justify their low offer. Ask the adjuster for a copy of their valuation report. They have to provide it. Often you'll find they used comps from 2 states away, or cars with a lower trim package, or they've listed your car's condition as fair, when you have records to prove it was excellent. This is where you can poke holes in their argument. Once you have your evidence, your receipts, your maintenance records, and your list of local comparable vehicles, it's time to craft your counteroffer. Write a clear, professional letter or email. Do not let emotion seep into it. This is a business transaction. Start by stating that you are rejecting their initial offer of X dollars. Then lay out your case. My vehicle was a 2019 Ford Escape Titanium with 45,000 miles in excellent condition. Your valuation appears to be based on vehicles in fair condition or lower trim levels. Then present your evidence. I have attached receipts for $1,500 in new tires and brakes installed in the last 6 months. I have also attached 5 listings for comparable vehicles in the Detroit metro area, with an average selling price of Y dollars. Finally, state your number. Based on the superior condition of my vehicle and the current local market data, a fair actual cash value is Z dollars. I am prepared to settle this claim for that amount. By providing a specific number backed by evidence, you've transformed from a complaining customer into a prepared negotiator. You've shown them you've done your homework. More often than not, this will prompt a revised, much more reasonable offer. But what if they don't budge? What if the adjuster comes back with a tiny increase and says, "That's our final offer"? You have another powerful tool in your belt, one that's written into most Michigan auto policies: the appraisal clause. This is your trump card. Invoking the appraisal clause means you and the insurance company each hire an independent, certified appraiser to value the vehicle. Those 2 appraisers then try to agree on a value. If they can't, they mutually select a third, neutral appraiser called an umpire who makes the final binding decision. This takes the decision out of the insurance company's hands and puts it into the hands of impartial experts. It costs a few $100s to hire your own appraiser, but if the difference in value is thousands, it's one of the best investments you can ever make. This process works for disputes over your vehicle's value. But what about everything else? What if the other driver's insurance is delaying, denying your mini-tort claim, or disputing fault? What if your own no-fault insurance company is refusing to pay for a medical treatment your doctor says is necessary? What if you're dealing with serious injuries, and the settlement offer for your pain and suffering wouldn't even cover a month's rent? This is the line in the sand. This is when you stop being a DIY negotiator and start looking for a professional. It's time to call a lawyer. Making that call can feel like a huge step, but it's about leveling the playing field. The moment an attorney sends a letter of representation on your behalf, the entire dynamic shifts. The insurance company can no longer call you. They can't use confusing language to trip you up. They can't pressure you into a quick, lowball settlement. They now have to communicate with your legal expert, someone who knows Michigan's complex no-fault law inside and out, who understands insurance company tactics, and who has the power to file a lawsuit if they don't act fairly. The red flags that tell you it's time to lawyer up are clear. If your injuries are serious, we're talking broken bones, surgery, a traumatic brain injury, or anything that requires ongoing medical care, you need a lawyer. Period. The potential value of your claim is simply too high to handle on your own. If the insurance company is ghosting you, taking weeks to return a call, that's a delay tactic. Call a lawyer. If they deny your claim for a reason that seems completely bogus, call a lawyer. If you feel overwhelmed, confused, and pressured, that's reason enough to get a free consultation. Finding the right lawyer is critical. You wouldn't hire a plumber to do your taxes. Don't hire a general practice attorney for a complex Michigan car accident case. You need a personal injury lawyer who specializes in Michigan auto law. Our no-fault system is a unique beast, and you need someone who lives and breathes it every single day. Look for a firm with a proven track record of taking cases to trial. Why? Because insurance companies keep tabs on which lawyers will actually fight, and which ones will just accept the last best offer to avoid a courtroom. The reputation of your attorney directly impacts the settlement offers you receive. And don't worry about the cost. Virtually all reputable personal injury attorneys in Michigan work on a contingency fee basis. This is incredibly important. It means they don't get paid a single penny unless and until they win your case, either through a settlement or a jury verdict. Their fee is a percentage of what they recover for you. This does 2 things. First, it means anyone can afford the best legal representation, regardless of their financial situation. Second, it aligns their interests directly with yours. The more money they get for you, the more they get paid. They are fully motivated to maximize your recovery. Hiring an attorney takes the immense weight off your shoulders. They handle the paperwork, the phone calls, the investigation, and the negotiations. They make sure you're getting the medical care you need, and that the bills are being paid correctly by your no-fault carrier. Your job is to focus on one thing: getting better. Their job is to fight for every single dollar you deserve. It's the ultimate protection when the stakes are highest. But what if the stakes are lower? What if it's not a life-altering injury, but you're still getting the runaround? Is there an intermediate step? A way to get help without launching a full-scale legal battle? There is. And it's a state-run resource every Michigander should know about. It's called the Michigan Department of Insurance and Financial Services, or DIFS. Think of them as the official referee in the game between you and your insurance company. They are the state agency tasked with regulating the entire insurance industry in Michigan. Their job is to ensure companies are playing by the rules, treating consumers fairly, and upholding the contracts they sell. And they have a powerful tool for consumers: a formal complaint process. This isn't just sending an angry email into the void. When you file a formal complaint with DIFS, it triggers an official inquiry. The state of Michigan, through this department, will formally contact your insurance company and demand a written response to your specific issue within a set time frame. This simple act changes the entire dynamic. Suddenly, your claim isn't just a file number in a low-level adjuster's queue. It's a file with the state regulator's name attached to it. It gets escalated. It gets reviewed by a compliance department. It forces the insurance company to justify their decision-making process not just to you, but to the very entity that grants them the license to operate in the state. So when do you use this? You use it when you're caught in limbo. Your calls aren't being returned. Your emails are being ignored. A claim for something clearly covered, like a specific medical bill or wage loss benefit, is being delayed for weeks or months with no explanation. Maybe they've denied a payment and the reason they gave you seems vague, nonsensical, or contradicts the language in your policy. These are the exact scenarios where a DIFS complaint can be incredibly effective. It cuts through the red tape and forces a response. The process is surprisingly straightforward. You can go to the DIFS website, find the section for filing a consumer complaint, and fill out an online form. You'll need to provide your personal information, your policy number, the name of the insurance company, and a clear, concise summary of your problem. This is key. Be factual. State the dates you called, who you spoke to, what you were told, and what specific benefit or payment is being delayed or denied. Attach any relevant documentation you have: the denial letter, the medical bill, your email correspondence. The more organized and factual you are, the more effectively DIFS can act on your behalf. Now, it's crucial to understand the limits of their power. DIFS is a regulator, not a court of law. They cannot force an insurance company to pay a claim if there is a legitimate, good faith dispute over the facts or the interpretation of the policy. They can't provide you with legal advice or act as your personal attorney. If your case involves complex legal arguments about who is at fault in an accident or the necessity of a highly specialized medical procedure, DIFS might not be able to resolve it. Their strength lies in enforcing the procedural rules of the game. Did the insurance company respond in a timely manner? Did they provide a clear reason for their denial? Are they engaging in a pattern of unfair claims practices? They are there to make sure the process is fair, even if they can't dictate the final outcome of a complex dispute. Think of it as a powerful tool in your toolbox. For serious, life-altering injuries and clear-cut bad faith denials, a qualified attorney is your absolute best advocate. But for the frustrating, maddening, and all too common issues of delays, non-communication, and questionable administrative denials, filing a DIFS complaint should be your first major move. It costs you nothing but your time, it puts official pressure on the carrier, and it creates a formal record of your dispute with the state. And with that, we've reached the end of our journey through the maze of Michigan auto insurance. Let's take a moment and look back at how far we've come, at the knowledge you now possess. We started by dissecting the monumental 2019 auto insurance reforms, understanding that the Michigan you used to know, with its mandatory unlimited lifetime medical benefits, is a thing of the past. You now know that no fault doesn't mean no one is at fault. It refers to the system where your own insurance, your PIP coverage, pays for your medical bills regardless of who caused the crash. You learned about the single most important choice you will now make on your policy: your level of personal injury protection. We walked through the 6 options, from the full unlimited coverage that made Michigan famous, down to the specific eligibility requirements for the Medicare or qualified health coverage opt-outs. You understand the profound risks of choosing a lower level, and now have the framework to decide what's right for your family's financial security. We demystified bodily injury liability coverage. You know that with the new law, your responsibility to pay for the pain and suffering of someone you injure in an accident is higher than ever. You understand that the state minimum of $50/100 is dangerously inadequate in a world of 6-figure medical bills, and that the recommended $250/500, or even an umbrella policy, is the true shield for your personal assets. We covered the other critical pieces of the puzzle. You know what mini-tort is and why that $1,000 or $3,000 check can be a lifesaver for getting your car fixed. You understand the absolute necessity of uninsured and underinsured motorist coverage, the safety net that protects you and your family when the at-fault driver has little or no insurance of their own. We talked about what to do in the immediate, chaotic aftermath of an accident, the importance of seeking medical attention, not just for your health, but to create a record, the critical 30-day window to file your application for benefits, the necessity of keeping a detailed log of every conversation, every bill, every mile driven to a doctor's appointment. You now know how to build the foundation of a successful claim from day one. And finally, you know what to do when things go wrong. You understand the signs that your insurance company might be acting in bad faith, and you know the two primary avenues for fighting back: the regulatory power of a DIFS complaint for procedural and administrative battles, and the legal power of a specialized attorney for the most serious, high-stakes conflicts. The purpose of this entire series was not to scare you. It was to arm you. It was to take this complex, intimidating, and expensive part of our lives as Michiganders and pull back the curtain, to show you that while the system is complicated, it is not incomprehensible. You are no longer just a consumer paying a bill. You are an informed participant. You can read your declarations page and understand what it means. You can have a conversation with your agent and ask the right questions. You can face the unfortunate reality of an accident and know the steps to take to protect yourself. This knowledge is power. It's the power to protect your family, your finances, and your future. Michigan Auto Insurance is no longer a monster in the dark. It's a system with rules, and now you know how to navigate it. You are in the driver's seat. If this series has provided you with value, if it's cleared up even one point of confusion, please consider sharing it with another Michigander. Send it to your parents, your kids who are just starting to drive, your friends who complain about their rates but don't know what they're actually paying for. We can all help each other become smarter consumers. And I want to hear from you. What was the most surprising thing you learned in this series? What questions do you still have? Drop a comment below. Your experiences and your questions help the entire community learn. Thank you for investing your time with me. Drive safe, stay informed, and I'll see you in the next video.